Let's start with the star performer here, platinum. I mean, its futures curve is in a steep backwardation, and we now have data showing a 660% year-over-year surge in physical bar and coin investment. The price action we're seeing primarily a story of a fundamental physical squeeze?
Platinum is found itself in an incredible sweet spot back in May. If we look at the chart, we've basically been in a downtrend for, now I can't even remember whether it was 11 or 15 years, but it's a long time. And then we actually almost had a decade, even though we were in a downtrend, it was a downtrending range of area where we basically more or less didn't do anything for a decade, simply because the focus was primarily on the automobile industry and the demand deriving from that. And then suddenly we came to the point where, with gold continuing to rally, investors or traders around and jewelers around the world look, well, hang on, this is just getting a little bit ridiculous. Anything else we can substitute and look at instead? And then obviously platinum was just a screaming buy at that point. We had a very bullish London Platinum Week back in, I believe it was late April or May. And that basically set the tone, because once again we were reminded that this market is in a supply deficit for the fourth year running. Supply is not easy to increase. It's primarily out of South Africa. And if we are seeing increased demand, not only from the industrial side, which is part of the high-tech future, but also from jewelry, then obviously we have a perfect storm. And basically within the next 2 months, platinum rallied 50%. But its relative cheapness is a strong argument for platinum, combined with the physical tightness that we're seeing.
For decades, platinum traded at a significant premium to gold. And I mean, today, it's still got a discount of more than $2,200 an ounce. Is this a permanent structural shift, or do you see a path for this historic relationship to kind of mean revert?
The continued strong demand for tangible assets, for metals, whether it's precious or industrial, in a world where you worry about the level of the dollar, worry about other asset classes, and where tangible assets will play an increased part of investors' portfolios. If that turns out to be the case, then investors will look at this relative cheapness to gold. It is probably a little bit too far to say it's a generational trade, but when you have something that moves 50% in a relatively short period of time, consolidate and then wants to move higher once again, it does indicate that demand is still out there.